Now that you know how to find high probability supply and demand setups, we're going to focus on finding these setups only in between our trade time session. That's why you see the purple background highlighted is highlighting my trading time session when price steps into my trading time session between 7:30 a.m. to 11 a.m. That's the only time that I'm in the markets actively looking for a supply and demand setup. Okay, and each session, there's a key right here. Each session, you're only going to find one or two high probability trade opportunities to make money off from. What do we also notice? We notice that there's the 3MA indicators here. Now, if you don't know what the 3MA indicators are, go back to the beginning of stage 3, and there I explain and break down what the 3MAs are, what each line represents and means, and how this confluence or this indicator could give us an extra confirmation to have a higher win rate and have a higher prediction that price may be going in my direction. So here, what do we have? We have price aggressively buying or pushing up, giving us a fair value gap, giving us a gap, plus breaking this recent high, breaking structure. Right over here, we have this black candle right here. Right, price came down with this black candle, rejected, and then the next candle after that began to aggressively buy, giving us a demand zone. Now, once we spot this, we spotted a demand zone. Price breaking structure, we have a gap. There's a high probability demand zone. We have 3MAs underneath price, kind of separated too. That's how you want the 3MAs to be. You want it to be in order. You want the 250 and the 13MA. You want them to be in order, just like that. Okay? So that's already given us a good indication that price is most likely going to push up. So what we're going to do, we're going to wait for price to come back to our zone and clear the gap. Boom, clear the gap. Now, once we see this, we either wait for price to break the zone and tell us if this zone is invalid, or price to begin to reject and tell us that we're about to start going up. And that's when you begin to look for an entry candle so you could get in the trade, right? Now we see this candle come, and we see price come down, reject. Like I mentioned in the other video, price normally comes down and rejects off the 50MA and then continues. Now that I see this, I'm going to be looking to buy. As soon as I see another candle past the high of that previous candle, I'll be getting in for buys, and I'm gonna put my stop loss either underneath the wick or at the bottom of the zone, right? And my take profit is going to be a 1-to-1, which means I'm risking 10 to win 10. Okay, let's see what would have happened. Okay, here we would have been in the trade already. Boom, bam, TP would have hit. Let's see, boom. So we would have been in the trade right there. TP would have hit, take profit 1 in 2 candles in 10 minutes, and we would have been done for the day. Now let's see what would have happened if we would have kept holding. Bam. Okay, price came down. If you would have kept holding for a 2-to-1, and you wanted to hold for a 2-to-1, right? Price would have rejected. So that's why at times it's better to just stick to the 1-to-1, and as soon as price reaches that 1-to-1 level, make sure you secure some profits. It could be 80%, it could be 50%, but at least make sure you close out majority of the money that you just made, because it's not guaranteed that price, even if you have all the confirmations in the world and everything is checked out, it doesn't mean that price will do what you think it will do. Because at the end of the day, price is going to do whatever it wants to do. A lot of the times you'll have a trade that looks beautiful, it has all the confirmations, and then the trade loses. And then you'll also have trades that look ugly and or don't have the confirmations, but the trade ends up making a big win. You know, so it's not guaranteed that the price will go to take profit too all the time. That's why you want to at least secure majority of your trade at TP1 and just hold the runner to TP2 just in case price does keep going up. So like that, you make extra money. Okay, in this example, we have the 3 MAs going across price. They're not above price and they're not under price. They're going in between, in the middle of price. So when I come into the markets and I see the 3 MAs are not in line, right? We have the 200 in the middle, the 50 above, and the 13 all the way in the bottom. Like they're not lined up at all. And we have them going through price and in the middle of price. That's already telling me, okay, I'm not looking to place any trades in this market conditions right now. Okay, I'm not looking to react any way to how market is moving right now, because price is just moving to the side. 3 MAs are in between price, right? There's probably going to be a lot of fake outs, and there's barely no good demand or supply setups at all. So just when I see the 3 MAs, when I come into the market, I see the 3 MAs are in between price like this, not above or below, lined up how they're supposed to. I already know, okay, that's not going to be a trading day. Even though I would have sat probably through most of the day, see if any setup would have came by, this would have been a non-trading day, because there's price is just consolidating, no supply or demand setup came up, and if they did, the 3 MAs are not lined up, giving me a strong confirmation and confidence to take that trade. So this would have been a no trading day. So here in this example, we have a strong bullish candle giving us a gap, breaking structure, right? Giving us a demand zone. But we have the 3 MAs are above price, not under price, giving us a confirmation for buys. 3 MAs are above price, telling us momentum is pushing price down. So even though we have a demand setup here, that's high probability because we have a gap and we have a break of structure, right? The 3 MAs are above price. So this, to me, I would not take this trade. This would have been a iffy trade to take just because everything is not lining up correctly. Let's see what would happen. Boom, here price broke the zone. So once price broke the zone, this trade already becomes invalid. Boom, and guess what? Price began selling hard, even though it gave us these confirmations in this demand zone. Price is selling hard, and if you would have got in this trade, even though it didn't give us no entry candle, you would have lost some money. Why? Because the 3 MAs are not lining up, right? So that's why the 3 MAs play a very important role in this strategy. Okay, look, price just kept dumping. It didn't do much. Right, so that's why you want to be careful with that, okay? And now look, now the 3 MAs are above price, and what is price doing? It's just dumping. See, but here there's not really no clear supply setup for you to find out trading opportunity to get in. And maybe this would have been a supply setup right here. You see this bullish candle, bullish pullback. Oh, damn. You see this bullish pullback right here? Pull up. This probably could have been a supply setup if price rejects off the zone, which kind of didn't. Yeah. And it broke the zone, so it's invalid. Bam. Oh, and look, price still freaking went down. Even though, even though it was invalid and the price did break the zone, guess what? The 3 MAs were lined up, and you would have lost this trade too. But hey, price, you was in the right direction. You know, even though you took a loss, and price literally wicked you out by one wick, by a couple points that hit your stop loss, and you lost, and then price just went your direction, it sucks, but it happens. And you know, the 3 MAs were above, and guess what? Even though the setup was invalid, the setup wasn't high probability because we didn't get good rejections of the zone, right? We didn't get good rejections of the zone right here. And the zone did get broken. The zone got broken before the entry candle happened, right? But the 3 MAs were above, price still played out and went in our direction. So that's why the 3 MAs are very, very important to know about, okay? Let's go to another example. In this example, we see price uptrending, right? And we see the 3 MAs are under price, separate. And this is how we want the 3 MAs to look. The more separate they are, the higher confirmation, the momentum will aggressively push towards that direction, right? Here, we have an aggressive buying, right? And it created a gap. But price did not break the recent high, making this a low probability demand setup because price did not break the high, so it's not giving us indication that it wants to go up. But we have the 3 MAs below us giving us bullish momentum indication. Let's see what would have happened. Okay, price came to the zone, rejected of the zone. And even though it never broke the recent high, price still continued to go up. Boom. Right? And why is that? Because the 3 MAs are underpriced, separated, and in our favor. Right? So I'm showing you this to show you that even though the trade did not have 100% all the confirmations, this trade was still a winner, right? Especially because the 3 MAs were under us, giving us extra confirmation that it was going to go up. But we never received a demand setup, a crystal clear demand setup to give us an indication and help us get in the trade, right? So there's going to be times where you're going to have trades that look beautiful. They have all the confirmations. They look super clean, but they turn out to be losing trades. And you're going to have trades at times where the 3 MAs are all messed up, not looking organized at all or where they're supposed to be, not above or underpriced, right? There's no clear confirmation, no clear high probability supply or demand setup, and the trade will win, just like it did here. You know, so just showing you there's going to be times where you will win and you will lose. At the end of the day, it's not you. But you do not want to focus on catching these type of trades. You only want to focus on catching high probability trade setups like the ones that we were seeing before in the other examples, because those are the type of trades that you want to practice catching. If you focus on the wrong trade setups, you will begin to develop bad habits. And I was there where I developed a lot of bad habits when I first started learning to trade because I didn't have a mentor or somebody to show me the actual way. And then that's why it took longer for me to become profitable, because I had a lot of bad habits I had to break out of, right? So in order for you to not go through that, what I have to went through and break out of those bad habits that I developed for practicing the wrong strategy or the wrong method or getting in the wrong trade setups, right? Just focus on high probability demand trade setups that have all the confirmations: break of structure, pullback, rejection of the zone, continuation, and 3 MAs lining up above or below price, depending where your direction is going to be for that trade. Let's go to one last example. So on this example, what do we see? Okay, looks a little tiny, but what do we see? We see price uptrending, right? Higher highs, higher lows. Right here, Price came up, came down, and then this one candle aggressively pushed up, creating a gap and creating a motion right here that broke the previous high. Also, we have the 3 MAs under price, right? And then right here we have price. It took a while. Price took a while, but it came down and finally, boom, cleared the gap. Came to the 50 MA, rejected off of it, gave us a clean rejection of the zone, right? Price did not close in the zone. Price just came to the zone, rejected, nice wick, and rejected off of it, closing bullish, right? So once I see this, and I see 3 MAs are under us, price came in, filling the gap, and rejected off the zone, not breaking the zone, and closed above. The next candle that breaks this high of the candle, I'm looking to get in for buys, right? My stop loss is going to be at the bottom of the zone or at the bottom of the wick, and my take profit 1-to-1. Boom. Let's see what would have happened. Bam, I would have been in the trade for buys. 3 MAs are under. Prices uptrending, going up. Boom. See. Bam. TP1 hit. Take profit 1 hit. Here, I would have closed out partials, right? I would have closed out majority of my trade position, and I would have probably left the runner for 2-to-1, just because this trade, it looks clean. It don't look too clean because price took a little bit long to get back to the zone and clear the gap, but 3 MAs are under, and we have heavy, aggressive buying power right here happening. So price already hit my take profit 1, right? I already closed out partials or majority of my trade, so I'm already in profit, right? Now the rest of my trade, I might move my stop loss lower, so now I'm risking less, or I might move my stop loss to break even. So now it's a risk-free trade, right? If price comes back down, and hits my stop loss, I didn't lose any money, because now it's a break-even trade. Now it's a risk-free trade, and I'm already in profit because I closed out majority or partials at TP 1-to-1 or at TP1. Now let's see what would have happened. And 3 MAs are under us, as we see. They're more separated than it was before. The 200 is all the way down here, so giving us a strong indication of buying power. I feel confident in this trade. Bam, I would have got clapped out, easy, no worries. Then what happened? Clapped out again, no worries. Boom. So this is what would have happened. Price would have came down and hit my break even, and I would have got out this trade with risk-free. I would have not taken a loss because I already closed out partials, and the runner that I was leaving for TP2 to get hit, it just hit at break even. So I didn't lose no money on that runner, right? Price came all the way down, grabbed liquidity and rejected like crazy, and then guess what? Boom. It continued going up just like we predicted. Right, and the price reverse over here at the end of the session. Not bad. But this would have been an easy win for a 1-to-1. And for the 2-to-1, it would have been a little bit of a harder win just because price rejected and it didn't hit. Oh well, it happens. It's going to happen. You're not going to win every trade, and price is not going to go to your zones all the time. So that is the 3 MA with the supply and demand, and that's how you trade supply and demand, or that's how I trade supply and demand. Hopefully the way I explained it, you're able to understand, and now it's in your power to go practice, back test it, drill it, and just try to see it in real time. And if you're in the Discord of Lunati Trading, you can ask me questions. If you have any questions on the strategy, some stuff that you may be unsure, that you didn't understand, right? Or some issues that you may be having while practicing the strategy or testing it out yourself live in the markets, you can ask me in the Discord, because it all matters about your risk to reward and your risk management. If you have those two things locked down, then you'll be profitable.